Today's show is brought to you by Audible. Audible is offering our listeners a free audiobook with a 30-day trial membership. Just go to audibletrial.com/scriptnoteshow, that's all one word, scriptnoteshow, and browse the unmatched selection of audio programs, download a title free, and start listening. It's that easy. Go to audibletrial.com/scriptnoteshow. Hey everyone, welcome back to the Script Note Show with Matt Tillman. For this episode, I wanted to talk about something that pertains to everyone's favorite time of year this year, taxes. So, we just got through the holidays and hopefully everyone had a fun, safe, and festive holiday season. And so the most recent post on the blog talked about some changes coming up for the W-4 form, which might be of interest to you. So, as I mentioned, as we turn the page on the new year like clockwork, you'll probably start seeing more ads from places like TurboTax, H&R Block, and more. So with that, from Catherine Thorbeck of ABC News says, in 2020, for the first time in more than 3 decades, the IRS has given its W-4 form, which determines how much federal income tax is withheld from your paycheck, a makeover. The agency says the revamped design reduces the form's complexity and helps with the transparency and accuracy of the withholding system. Basically, it drops the language of allowances, which might be confusing for some, in favor of a series of questions about your income and dependents. The Internal Revenue Service has released a new form for the 2020 tax season. So you might be asking, why the redesign? Essentially, the IRS says the revamp is supposed to make it a little easier for everyone to understand. While it uses the same underlying information as the old redesign, it replaces complicated worksheets with more straightforward questions that make accurate withholding easier for employees, the IRS says on its website. So what exactly is different about the new W-4? Tax service company H&R Block breaks down what new W-4 form encompasses next to the old one posted on the blog post, which I'll share in the show notes. But essentially, when you break it down, it's actually pretty similar. Taxpayers now have different filing status choices in the new form. So there's also more options to choose from if you've changed jobs, dependents, or filing status. The total number of allowance section the total number of allowances section is now gone. Instead of calculating the number of allowances, which translates into a certain amount of tax withheld, such as the more allowances, the less money is withheld, the form features questions about your income and dependents. There's also a new optional Step 4 section on the new form for other adjustments, such as deductions for mortgages. Allowances were also tied to the personal tax exemption, which got eliminated with the tax cut bill in 2017. In the past, the value of a withholding allowance was tied to the amount of the personal exemption, the agency writes on its website. Due to changes in law, currently you cannot claim personal exemptions or dependency exemptions. So you might ask, is everyone required to submit the new Form W-4? No. Workers who have used the Form W-4 in any year before 2020 are not required to furnish a new form merely because of the redesign, according to the IRS. Employers will continue to compute withholding based on the information from the employee's most recently furnished Form W-4. However, H&R Block does recommend you resubmit a new W-4 form when you start a new job, get married, have a child, or if you want a more accurate withholding. So for more information on the new form for both employees and employers, the IRS did roll out a new dedicated FAQ page, so I'll put a link to that in the show notes, and you can be sure to check that out. So, again, doesn't sound like you'll have to submit a new form necessarily, but if you've had any major life event changes, you will definitely want to check that out. So again, I'll put a link to that in the show notes, and with that, I would like to thank this episode's sponsors. Hey everyone, welcome back. So, another financial news to get you ready for the week. According to Bloomberg, stocks declined in the yen, gold, and treasuries advanced in the wake of escalating Middle East tensions as Asian financial markets returned to full strength following the New Year holidays. Japan's currency matched a 3 month high in the wake of fallout from the U.S. killing of a top Iranian military commander in Iraq. Gold surged to the highest in more than 6 years, and treasury yields ticked lower. Japanese, Australian, and South Korean equities fell and U.S. futures slipped. The S&P 500 index posted its biggest loss in a month Friday in the wake of the killing, which threatened to spur escalating violence across the Middle East. The tensions cast a cloud over largely positive forecasts for risk assets at the start of 2020, with the U.S.-China Phase 1 trade deal expected to be signed later this month. Moves by China to bolster economic growth and signs of stabilization in Chinese manufacturing have also offered hope for a rebound in commerce. All of the Middle East's major equity gauges fell on Sunday as the security situation appeared to deteriorate. Iran said it would no longer abide by any limits on its enrichment of uranium, while President Donald Trump said the U.S. had identified 52 Iranian sites it would hit if Tehran retaliates over its slain general Qasem Soleimani. In the latest developments, Trump threatened a major retaliation if Iran did anything and vowed to slap sanctions on Iraq if U.S. troops were expelled from the country. Everyone got comfortable in that fact that the truce in the trade war had come through and the outlook for 2020 looked a little bit better, and then we had another geopolitical reminder come through, said Suncor Group financial market strategist Peter Dragisevich. Pardon me if I pronounced that wrong. It's going to be a big driver of markets in the short term. Elsewhere, Brent crude oil extended gains, rising to just shy of $70 a barrel. Here's some other events to watch for this week. India reports its annual GDP estimate Tuesday. Federal Reserve officials Richard Clarida, John Williams, James Bullard, and Charles Evans speak on Thursday. The U.S. monthly employment report is due Friday. And when we come back, we'll have another story about how a official with Wells Fargo thinks that the stock market may see some additional volatility this year. Welcome back. So, to finish out this episode, according to Market Watch, even as geopolitical tensions continue to ratchet up, there's much to be bullish about in the stock market in the new year, but maybe a little too much, according to Chris Harvey, the head of equity strategy at Wells Fargo Securities. There's a lot of things to like. Rates are lower, credit spreads are tighter, the Fed has been accommodative. We've got some sort of resolution with trade and tariff, and sentiment has improved greatly, Harvey explained to Bloomberg in a recent podcast. And that's what we don't like. In other words, when everything starts turning positive and expectations go higher, that's usually when investors should be worried or at least a little bit more cautious. But they don't seem to be. Typically, when people are a little bit more, what would we say, greedy as opposed to fearful, it's not always a great time, he said, with a nod to Warren Buffett, who's uh, above as an off-cited market mantra. With expectations so much higher, we're just worried that things can change and change rather quickly. In contrast, and with the benefit of hindsight, Harvey cited the jittery fourth quarter of 2018 as a great time to buy. The wheels were falling off the cart, the world was going to end, it was a fantastic time to get involved, Harvey said, pointing to the strong returns that followed. You had a great opportunity to invest. Bullishness was in short supply in Friday's trading sessions, again as investors reacted to the U.S. airstrike in Baghdad that killed a top Iranian military commander. Oil prices jumped while the Dow, S&P 500, and NASDAQ all closed lower. So with that, that's going to be it for this episode. Hope you have a great start to your week, and especially if this is your first time back from the holidays. Again, hopefully everyone out there had a great holidays, and I wish you all the best and have a great start to your 2020, and we'll talk to you again soon.